Kiva US. So I develop partnerships with city governments, community development financial institutions, and technical assistance providers to create entrepreneurial ecosystems or hubs that foster financial inclusion at scale across the US. And I wanted to start by expressing my gratitude to Heather and Stephanie at Oweesta for allowing me to share Kiva's capital opportunities available to Native CDFIs. Kiva's 0% interest loans can help Oweesta members to serve the underbanked Native American communities and help Kiva achieve their mission of empowering small businesses to eradicate financial inclusion. I am joined here by Betsy Benoit, one of our rockstar volunteers who is located in Portland, and I'd love her to give a quick introduction. And she may be, I'll be the main presenter, but she may be adding on a bit of information as we progress through the presentation today. So Betsy, would you mind introducing yourself?
Hi, everyone. Just want to make sure you can hear me. And I think I only, yep, okay, great. Hi, everyone. I'm excited to be here with Anne. Just a quick background, like she said, I'm currently volunteering with Kiva, specifically Kiva US. I know there's so much need out there for creating a much more financially inclusive environment, especially for entrepreneurs. Just a little bit of my background. I was in corporate America with Pfizer Pharmaceuticals for over 20 years, and then life change, and I became a fellow with Kiva working in Ghana, Tajikistan, and Georgia. And after that, I decided that Kiva was going to be my new home, and worked with them for their international travel, which is now non-existent. So I decided to instead be able to continue my work with Kiva through volunteering. And that's why I'm here.
Yes. Can you hear me, Betsy? Can everyone hear me?
Yes.
Yes. Okay, great. I'm not sure if I'm getting static from my end or from basically from the other end. We are also going to be joined by Gary, one of our from First American Capital Corporation. Near the end of our presentation, he is a Kiva partner, and he's going to share a little bit of his story. I first came to Kiva as a volunteer, much like Betsy, working on some of the original partnerships in San Francisco and Oakland. I live in San Francisco and sort of worked to create sort of the original network that exists today in our Oakland market. That's an exciting point of reference for me because we have really knit together the community and have served 850 small businesses there with about $4 million in interest-free capital. We have support from many organizations, trustee organizations, and the Mayor Libby Schaaf has been a huge supporter of Kiva. So I will point to that a bit in my presentation. It just shows the power of Kiva and what we can do in specific geographies. But on with the presentation. Kiva, I'm not sure how familiar all of you are with Kiva, so I will run through sort of the basics from the beginning. Kiva was established in 2005, and it really enables everyday people to pool small lending contributions as little as $25 to provide financial access to entrepreneurs across the globe. So since its beginning, which started with a handful of fishmongers in Uganda, Kiva has grown to over 1.8 million lenders worldwide and has lent a combined 1.4 billion to more than 3.5 entrepreneurs in 77 countries around the world. And that is very exciting. But as Betsy mentioned, currently our US program, which was started in 2011, is really having, I would say, a really important moment for Kiva. In 2011, leadership decided that really something needed to be done to support entrepreneurs right here in the US. So what we do here is fill a very unique position in the US financial ecosystem. We provide risk tolerant, early stage, 0% capital specifically to women, people of color, low to moderate income entrepreneurs, people with low credit scores, undocumented and formerly incarcerated. We refer to this segment as the missing micro. They don't qualify for traditional bank loans, and they're also tend to be very expensive for CDFIs to serve, as the cost of servicing their loans can be actually greater than the loan size themselves. So here's a little bit of the impact that we've achieved over the last 9 years. We've funded over 7,000 businesses with over $42 million in interest-free capital, like those you see here, Gilla, Sarah, and Anna. And these are some of the 55 borrowers that have reported their ethnicity as Native American. So in the next part of my presentation is going to be about the potential impact that we can have together if we collaborate. Just a little on our product. We firmly believe that crowdfunding can be a tool to promote economic equality. And traditionally, we have had since the beginning a 0% loan product. It was $1,000 to $10,000. We have, as a result of COVID and recent events, we have extended that to a $15,000 product. And we have also implemented a 6-month grace period that can be taken advantage of by any entrepreneur that is affected by COVID, which is most of the entrepreneurs that are coming to our site. The repayment terms are generally 12 to 36 months, but that would be 42 if you add in the grace period. Our average loan size in the US is currently $7,000. And that is taking about 15 days to fundraise on our site, and is supported by patient capital of approximately 120 crowd lenders per loan. And we'll get into a little bit more of what that looks like. So this is just a little bit to show you sort of our loan bucket size, and we don't follow traditional underwriting guidelines such as minimum credit scores, and we don't require collateral interest or a guarantor. Instead, we aim to analyze the business and the borrower and their business holistically and go further downstream than a traditional bank or a CDFI would normally serve. So our assessment includes business verification, background checks, and fraud checks. We look a little bit at the debt to income ratio. We assess impact and their relative financial exclusion. And a really important part, as you're going to see, of our loan profiles is the compelling stories and photos. And we believe that really this is generally it's not a one-off, but a loan program where entrepreneurs can apply on several occasions to fund specific loan purposes. So for example, we have an entrepreneur in Oakland named Felicia with a soap company. She's had a loan for $5,000, $10,000, $15,000, $20,000, and even $25,000 when we were piloting those loan programs. So it's just to say that each of her loans have had a very specific purpose, and she can keep coming back to Kiva and her lenders as she takes on brand new projects. These are just a little of the basics that it's nice to be aware of if you're presenting the idea of using a Kiva loan. But Kiva loans can be used to purchase equipment, hire a staff, or for any specific financing needs to start or grow a business. But there's a few basic criteria that need to be met. One is the entrepreneur needs to be over 18 years old. The loan is only for business purposes. Internationally, we do loans for other purposes. So sometimes if you see those on our site, in the US, it's specifically for business. That business must be located in the United States. And we don't support businesses that do any kind of multi-level marketing or any federally illicit activities. Unfortunately, we can't do any hemp-related products. that is really related to our relationship with PayPal. PayPal gives us an enormous gift every year of providing 0% interest on all of our loans, and we pass that on to the borrower. So one of the things that we have to do is since PayPal is not allowed to work with borrowers and engage in federally illegal activities, then we need to abide by the same rules. Borrowers cannot be in foreclosure or bankruptcy. If those have been cleared, we're happy to lend to borrowers, and they need to demonstrate their social capital by having a small number of their friends and family make a loan to them in the beginning phase of their campaign, which we'll go over in the next slide. And then, as I mentioned before, borrowers must have a PayPal account. This is also something that differentiates our US product from our international product. Here, the loans are distributed directly to the entrepreneurs via PayPal once the campaign has been completed, generally 5 to 7 days later. And this is just a brief description. I am actually going to share this presentation with anyone who's interested after. So, I'm going to go over this section quickly, but here you will have all the detail in the follow-up email. So, entrepreneurs submit their loan profile, which includes a photo, their personal story, a story of their business, and the purpose for the loan. And then Kiva reviews that loan to determine the loan size and the amount of lenders required in the private fundraising phase. At this time, we also do a soft credit check, and that's just to verify the self-reported information that the borrower is providing. But just a little bit more about that private fundraising. So once the loan has been approved for a specific size, and we've determined the amount of lenders that entrepreneur should bring into private fundraising, we send that entrepreneur a link, and that entrepreneur invites their friends and family to support them with anywhere from 5 to 25 people to support them with a loan of $25 within the 15-day period. So that is what we refer to as the private fundraising period. Once they comply with that amount of borrowers required in the private fundraising period, their loan goes live automatically on our site, and then they have access to the community of 1.8 million lenders around the world. And that fundraising phase can last from anywhere from 1 to 45 days. It's important to note also that our campaign is an all or nothing campaign. So in either of those, if the loan expires or they don't reach either of those phases, then they can reapply a few months later. But generally speaking, 95% have a chance of being fully funded on our site, especially those that are in an area where we have a Kiva hub, which we will get to later in the presentation. The repayments, as I mentioned, are 12 to 36 months, and they can also opt in for 6 months of grace period with no payments. So simply put, these are a $10,000 loan would have 36 repayments, and those would be $277.78 per month. And those repayments would come to Kiva and the lenders via PayPal. So if the lender had 100, if the borrower had 100 lenders, when the borrower repays that loan, that repayment would be split into 100 pieces. And so we're going to take a little bit of look at our campaigns. As I mentioned, really, this is our crowdfunding platform is a people supporting people with loans of at least $25 at a time. So everyday people like you and I can support entrepreneurs. So this is a really interesting loan profile. Hunter, according to his application, is part Native American. And he did a really cool thing at the beginning of COVID that I wanted to share with all of you. He has a fascinating business story. He and his wife traveled the world. And then when he came back to the US, he bought a distillery in Oklahoma. And when COVID hit and hand sanitizer became very difficult to get, he actually used his distillery to create hand sanitizer and then used the profits of this, this effort to support displaced workers. So I just thought that was a really fun. Kiva, we really love to support entrepreneurs that really are, that really have a social aspect to their business. So that's really what we're, excuse me one second. Okay. And so right now I wanted to show you Urema here. She's from Denver, Colorado. She is in the middle of her campaign. Well, she's 20% funded in her public campaign. You can see that she's fundraising for a $6,000 loan. So far, 34 lenders have supported her loan. And she is fundraising to help purchase semi-precious gemstones, jewelry, and jewelry beads. And I think one of the reasons I showed you her picture, she also reported on her application that she is Native American. And one of the things that I really like is that this is a beautiful photo. And you know, a photo speaks 1,000 words, and this is a really important aspect of crowdfunding. So Anna is also fundraising a $15,000 loan to open her business to buy equipment for plumbing, electrical, and remodeling costs. And the place I wanted to point you in the direction of is the 2X in the corner that you see in the corner. That means that her loan is being supported, is being matched by a group called Milwaukee 7 Music, and they are an institutional lender. So anytime that an individual behind this group, Milwaukee 7, and to get support and accelerate their campaigns. So that's important. And so really most Kiva borrowers would not really have received financing elsewhere. Our intent is to provide a stepping stool so that entrepreneurs can start their upward financial journey up the capital ladder, which is just the beginning. And hopefully later they are able to access larger loans through partner organizations, like some of those that you see here. And I just want to point out that Kiva is really meant to be used collaboratively with lenders in a market to complete a pathway of access to capital. So we're not looking to take the place of some communities have wonderful grant programs in place at the moment. You know, obviously a grant is much better than a loan, as all of you know. Also, sometimes Kiva loans are used to purchase or put a down payment on a piece of equipment. We're used as a part of a capital stack. One of our hub organizations, which is WIBIC in Wisconsin, they give joint loans, which 50% of the loan comes from Kiva, 50% of the loan comes from WIBIC, which really gives a lower blended interest rate. So that's really a really important. The other point is that you know, by providing these loans, really what Kiva loans do that is a little bit different than most financial institutions, since it is a crowd-funded loan, what's really important, and I think what entrepreneurs really get out of the process of getting a Kiva loan, is that community capital and support. I think one of the most powerful things for our borrowers is that having people who will eventually become customers and support them in other ways is super important. So we call it the 3 C's, kind of community, collaboration, and customers that can come out of a Kiva loan as well. So we encourage entrepreneurs, although the more highly financially excluded are, we recognize that many of these entrepreneurs may be challenged also by our platform. most of our partner organizations do help entrepreneurs really work through this part of the process so that they can be successful, which is very rewarding for them at the end. So Kiva is facilitating several types of innovative partnerships with city governments, CDFIs, and business support organizations that promote microlending in geographies across the US. So I'm going to share 4 of those with you today. And I just want to point out that we can't leverage impact for entrepreneurs across the US without partners on the ground. And we're hoping that your organization might be interested in finding ways that best suits your organization so that we can partner together to serve more Native American borrowers in 2021. So the first type of I'm going to talk about the partnerships in a sort of in the order of involvement. So I would say the referral partnership is the easiest way to get involved, then a Kiva trustee, then a hub partnership, and then potentially a managed lending fund. So the easiest, I would say the simplest form of getting involved with Kiva and using Kiva to support your entrepreneurs is really connecting business owners with Kiva to crowdfunded loans supported by risk tolerant lenders. I think that if there's one thing apart from the fact that we can help entrepreneurs get their story out to the world and help them gain community and customers, the other piece is that the lenders that are supporting these loans are also really value impact above return. And I think that's a really important thing. And as entrepreneurs begin their businesses, especially at a time right now when many businesses are suffering and have the potential not to repay their loan, I think Kiva is a great option for those businesses. So allowing them to get their word out, potentially gain customers and connections is really important as well. And one way that referral partners can do this on our platform really easily, they could simply set up a trustee account. And then there's a link that they can send out to entrepreneurs as they speak to them. And then the entrepreneur just fills out that application that was sent through the link. So it's just a really easy way. And I'll just talk about a few of the organizations. So for example, we have organizations that are involved in all 3 types of these partnerships. So one of these is the California Small Business Development Center in Contra Costa. They're right across the bridge here in Oakland, just beyond Oakland, California. And they have always used Kiva. So they just refer borrowers to Kiva when they realize that they don't have another form of capital to support them. Whoops. Uh-oh. Does anybody have any questions while this is reloading? Uh-oh. Never had this happen. Okay, let's see. Can you see my screen?
Yes.
Okay, let me just try presenting again. Sorry about that. This is really strange. Well, let's see. I think we'll show anyway. I think that's what it wants us to do. Okay, I can see what's missing. So trustees are borrower, trustees, excuse me one second. Let me try to reload that. Okay. So trustees publicly vouch for small business owners on our site. And one of the things that this does is show our lenders that that borrower has the support of that organization, which accelerates the speed at which that small business fundraise on Kiva. Later in this presentation, you're going to hear from Gary, who is a Kiva trustee at first. And I think he can share his experience with you. But one of the things that I really wanted to show you, and I can pull that up at the end of the presentation, is that every trustee has a dashboard and they can track the impact. So for example, the example that I was going to show you is from Central Community Partners. They're now a Kiva hub, but they were originally a Kiva trustee. And so anyone who comes to our website and lends to one of the entrepreneurs that they're supporting can see that they have supported $2,000 in loan volume. They can see their repayment rate, how many fundraising loans they have, how many have been paid back, and how many have been repaid in full. The other real advantage to becoming a Kiva trustee is that the endorsement can help borrowers get approved for larger loans and sometimes lower amounts of borrowers into public fundraising. This is a really great way to get involved and to be able to use Kiva as a tool for your organization. As we climb up the scale of organization, hubs really are organizations that are interested in leveraging Kiva's plug and play tool to expand capital access, and they take responsibility for a particular region, assuming the role of the anchor organization. So not only do they support borrowers in that region, but they promote collaboration among all of the stakeholders, including trustees. So this model is really a way to bring stakeholders together in a specific community. So government, technical assistance providers, CDFIs, and foundations around solving the issue of financial inclusion. Mayor Libby Schaft, as I mentioned, I started my work there in Oakland, calls Kiva the Bank of We. So we have a Kiva hub in Oakland, which is managed by Central Community Partners. That hub organization really supports the entire ecosystem. The hub organization hires a capital access manager, and that capital access manager works with Kiva to make sure that each application is connected with the appropriate technical assistance and capital access opportunities. They know the local ecosystem very well. They have back-end access to Kiva's system through our CRM. And they really are that liaison between the ecosystem trustees, referrals, and Kiva headquarters. And they provide fundraising and technical support throughout the application process and fundraising. So I just wanted to name a few of our Kiva hubs. The Kohala Center in Hawaii is a new trustee. They work primarily with agricultural loans, but they're supporting the entire ecosystem in Hawaii. Startup Waco in Texas. And in Colorado, we're working with a mission-based lender called Colorado Lending Source that some of you might be familiar with. Progress Oklahoma City just came on as a new Kiva hub. And then in my presentation, I referred a few times to WIBIC. So Wendy Bauman, the director of WIBIC, WIBIC is our hub partner for the entire state of Wisconsin. Her slogan is "Don't say no, say Kiva." Really, they're a CDFI. They're also a women's business center, and they offer loans to entrepreneurs who don't qualify for their own loan product. Once that loan is repaid, then the entrepreneur can apply for a joint loan, Kiva and WIBIC. And really, this is just to show you that every community is so different, that each of these ecosystems look really different. But a community can choose what the combination of stakeholders that really leverages the pre-existing strengths for that local development community. And so just as a just as a point of reference, trustees generally are technical assistance providers, sometimes CDFIs, that sort of strengthen small business. So those could be incubators, city governments, technical assistance providers, CDFIs, women's business centers, SBDCs, we see a lot of. And hubs can be, we have a few city government hubs, we have many technical assistance provider hubs, and we have many CDFIs and incubators as well. So they really tie the program together, led by this capital access manager who services borrowers and connects the ecosystem. I do want to mention at this point that anyone who's interested in talking to me a little bit more about becoming a Kiva hub, please feel free. I put my email in the chat. There is a fee involved with being a Kiva hub, and generally that is $25,000 a year, or there's a 3-year, there's a reduced fee for 3 years, which is $65,000. This can vary a bit depending on how large the ecosystem is. So if you're interested in this, please contact Betsy or myself, and we will give you actually more information. But generally speaking, the hub organization, the CDFI, or the city government, or the technical assistance provider isn't really the one providing the funding. We look for other funders who can help cover both the sort of the access fee to Kiva, as well as the capital access manager's salary. And some of those sources of funding are CARES Act funding, CBDG funding, funding from community foundations, Community Reinvestment Act dollars from local banks. And I'm happy to provide lots of examples of how other hubs are doing that across the country. I will mention right now, we've just brought on our 30th Kiva hub. So we're about at 30 Kiva hubs across the country, but many of the states where many of you are, we don't have representation for Kiva at all. So for example, we have no hubs currently in Oregon, Washington, Montana, help me out, Betsy,
Nebraska, Maine. Alaska, do we have? I don't think.
Alaska, yeah. We have trustees that work in those places, but and then this last form of support usually comes after we have a Kiva hub, but a managed lending fund, I referred back a few times, is a one-on-one match. So generally this is supported by community foundations, or banks can support the work of the hub by contributing to a managed lending fund, which provides a one-on-one match based on the priorities established by the hub and by the funders, such as supporting women-owned businesses or entrepreneurs within specific zip codes or sectors. This is a really flexible instrument that can be used to complement the work of the hub. So for example, I'm working with the city of Tacoma at the moment, and they are working on they would like a managed lending fund specifically to support African-American entrepreneurs. And so they're going to trigger that match by the endorsement of a trustee organization that works closely with that population. So that's a really exciting thing. I think that also the great thing about this is that these funds are managed by Kiva's development team. So once you set up the fund, everything is just deployed automatically for a specific geography that the funder specifies. These are 2 to 3 year periods, and they revolve as the repayments occur. And if the funder support is visible by this 2x. And Gary's going to share a little bit about how that he's done that as well. My last example is the brand new hub that we have in Phoenix is called Ignite, and they're actually powered by the BBB. They are the Kiva hub for Phoenix, Arizona. GoDaddy funded a full-time capital access manager, And the Capital Access Manager is working with Change Labs to become a Kiva trustee. And as you might know, they're a preeminent incubator for Navajo and Hopi tribes. And the hub itself is super committed to serving Native entrepreneurs, since they're an important part of the Arizona community. So I thought this slide would show you how this can all tie together. And then I'm going to turn it over to Gary, so he can share a little bit about First American Capital Corporation and the work that they have done with Kiva as both a trustee as well as a managed lender. Gary? Gary
was on, and then it appears he's hopped off. Let me try and grab him real quick. In the meantime, are there any questions for Anne or Betsy?
That's a great idea.
You can also feel free to post in the questions in the chat. We're happy to go back and answer those.
Do we have Gary back?
He's back. Okay. Hi, Gary. I just hit unmute. Are you able to talk? There we go.
Can you hear me now?
Yes.
Sorry about that. I went to unmute and hung up. So, is this a good time?
It's perfect, Gary. Thank you.
Okay, regrets about that. Good day, everyone. So I'm Gary. I'm located in the Milwaukee area. I'm assistant director with the First American Capital Corporation. We became Native CDFI certified in 2004. In 2007, we became an SBA microlender. And we're currently what's called a key strategic partner with our state funder, the Wisconsin Economic Development Corporation. The reason I tell you that is that relationship with the state, Wisconsin Economic Development Corporation, led to us becoming basically a contracted service provider with the state. And it's called a key strategic partner, or KSP. And as part of that KSP relationship, the state provided us with a $50,000 investment to become a trustee with Kiva. And to be quite honest, we weren't very aware of Kiva. We were aware of crowdfunding and that, but we didn't have a relationship with Kiva at the time. But what we ended up doing through that investment is we were allowed to get training through the local hub here in Wisconsin called WIBIC, Wisconsin Women's Business Initiative. And basically, and I'm not sure, are you seeing our dashboard, Annie?
Yes, your dashboard is we're displaying your dashboard right now, which shows that this is as a trustee, you've endorsed $64,500 in loans.
Right. So this is you're not going to see the whole thing, but we actually have a established platform in the Kiva program for managing the trustee account. So basically what we did, and I'll just talk fast about this, we invested $50,000 through our contact with the local hub. That's a managed account, so it's off of our balance sheet. It's in their account. There is a small annual fee for that, but as was talked about, all the underwriting, loan servicing, and so forth is all managed by Kiva. So really, there's no additional work for us for doing this. Our major part as serving as a trustee is that we get the inquiry from the prospective borrower and listen to the story, in some cases help create the profile. And you see a couple pictures here, and earlier you saw the profiles. Really important, because that's a compelling part of the story. And you are in part selling a story with this program. And what we do then is write a endorsement once we learn about the business owner and their aspirations, what the money will be used for, and the ability to repay. And so we craft that endorsement and post it to their account. And the added value for the borrower here is that we match dollar for dollar what's raised in the crowdfunding after they establish a private requirement. So it's really an awesome way for I would say nascent entrepreneurs, very early stage business startups, people actually that, and we don't say no often in our to loan inquiries to FACC, but from time to time it's not quite yet, as you guys know. So Kiva is a great first step in that ladder or that continuum of financing we talked about earlier. So I hope that provides a general overview, and I'm certainly available to take questions. Thank you. Or anything else you want me to add, Annie? Or
No, I think that's perfect, Gary. Thank you.
okay.
Does anyone have any questions at this point? I'm just going to flash this up. Here's our here's our website, kiva.org. A borrower can come right to kiva.org/borrow. Trustees can go to this, which is kiva.org/trustees/apply. And then here's my email, and ANNE, L for Lufkin, @kiva.org. I'm happy to speak to you about any trustee relationships or any other questions that you have about Kiva. And I think Betsy put her email in the chat as well. And then we will share this presentation later, but there's a bit of a description. Sometimes it's a little confusing the first time you hear. So there's a list of what really a trustee does versus a hub organization versus a loan matcher. And here's a link to show our active hubs across the US right now. As you can see, we have several states with no hubs currently. And about 70% of our borrowers now are supported by hubs. But we're happy if any of the modalities of partnerships with Kiva. We're happy to help you to serve your clients and collaborate together. So I don't know if there's any other questions. I'm going to stop sharing this.
This is Gary again. Could I add one more thing?
Of course, Gary. Thank you.
So as you heard, the different levels of engagement with Kiva, and I'll just tell you from our experience, the hub, having a relationship with a hub organization is really important. Why? Because they're basically the subject matter experts. In our case, I actually have a hired access manager, capital access manager, and TA provider, basically for trustees and others interested in the program. And they do a tremendous amount of marketing, more effective marketing actually than we're doing. And so a lot of referrals and leads come actually from the hub. And do you know what I mean, Annie?
I think you're absolutely right. I think working in conjunction with a hub really makes the work of the trustees so much easier because you have a person to rely on there. WIBIC, for example, they're a powerhouse. They're amazing all the work that they do as a women's business center, as a CDFI, but also in terms of what they do to support entrepreneurs. So for our trustees that that are fortunate enough to work with them, they work with the entrepreneurs to take them all the way through those campaigns on the fundraising side, which is super helpful to be able to work with a hub organization. I really appreciate you bringing up that point, Gary.
Yeah, so eventually down the road, if there's interest in this program, you know, I guess I don't think there are any Native hubs, are there, right now in the
No.
US?
No.
So something to aspire to, just saying. So I'll go back on mute now.
Definitely, Gary. We would love to work with any of the organizations that would like to start a hub for Native Americans, or even start as a trustee. Some organizations, they sort of work through those types of partnerships. So some organizations start by referring a few clients, and then they become trustees, and then those trustees become hubs. So we're happy to work with whatever way works best for your organization. Stephanie, do you have anything else you want to add, or any other?
Yeah, I just had a quick question. What is the typical bandwidth of a hub organization? So I guess maybe like the typical asset size and key staff that are needed in order to become a hub.
That's a great question. It basically runs the gamut. So it really depends on an organization that would serve about 20 loans per year might have a capital access manager that dedicates about 50% of their time to Kiva, and maybe fulfills another function at their organization. I'm going to give the example, or an organization like Colorado Lending Source that is serving Denver. They have a full-time capital access manager, but she also does intake for anyone who comes to Colorado Lending Source. And really, she shares the whole capital ladder of all of the products with each entrepreneur as they first come to Colorado Lending Source. And that's been a really successful model. So she's a full-time capital access manager serving the Denver market. They just started in February and have done about 60 or 70 loans already through Kiva. So they've really been able to, some of that obviously is due to COVID, but she really, dedicates time to other things at the organization. So each organization, I think the ones that are most successful can really leverage the capital access manager's work, and they can do something that they're doing normally for their own organization, and that there's a natural fit with, for example, with CDFIs. So for example, organizations that are technical assistance providers like Central Community Partners that I shared, who is the trustee for Oakland, they help entrepreneurs with business planning. And so as they offer business planning, once the entrepreneur has been through their set of courses, they offer Kiva as an alternative as well. So that works also differently, but works well. We at Kiva, we train the capital access manager and work with the capital access manager. But really we don't dictate what that structure looks like. We're really work with the community of capital access managers. So we have 30 of them around the country. They connect to each other as well. And I would say that not only do they receive lots of great training from Kiva, but they also get great ideas for how to support entrepreneurs from each other. So being a part of that network and being a part of that channel that they can share ideas is also, I think that is a super powerful part of being a capital access manager.
Awesome, thank you. And along the same vein, what is the typical, or maybe Gary can answer this too, the time and capital needed to become a trustee?
No capital, no, the Kiva trustee is just simply using the platform. I mean, and the trustee, again, they get access to that dashboard. Important point about trustees is they don't have to endorse everyone that comes to them. They can endorse whoever they choose. And there's no fee for that on our site at all. It's a very quick process.
Yeah, but if I could add, just in our case, we did have that managed account added to that trustee platform, right? So in our case, we had a $50,000 investment. You know what I mean?
So basically that $50,000 in that $50,000 investment that you were given allowed you to invest in entrepreneurs.
Yeah, so we were doing the dollar for dollar match, which, you know, makes it that much quicker to get to goals. And that piece right there is golden for prospective borrowers, because it, you know, I mean, it literally cuts the time in half for them to reach their goal, you know, whether it's 10,000 or 5,000.
Yep.
I'm also just going to, this is Betsy, I'm going to quickly jump in and say that, you know, every trustee hub has their own needs and requirements. And Kiva is just really here to help support where they are in their progress to give out the loans that they need to give out. And I think one of the beauties of Kiva, especially with the Native American population, is, and the CDFI, the Native CDFIs, is Kiva is a place that entrepreneurs that perhaps your organization can't give a check mark to and give a loan to. You can start them with Kiva, and then their next loan or their third loan, you can take that on and grow it from there. And I think that's a really important part of this is Kiva would love to see that entrepreneur in their startup phase or in their low fiscal needs to then be able to grow and become a client, a full client of the Native CDFI and beyond. We're just there to help get them started.
Good point.
There's a question in chat.
Yeah, so the question is, if a person wants a loan, but their community is less than 1,000, how much funding would they need from their community? Would they be limited on the loan amount due to population size? So I think that just asking if the community is really small and not able to support that match. So you have the first friends and family.
Yeah. So I will say this is one of the areas, for those of you who've known us for years, we've advanced on this, and we're really trying to, first of all, the trustee organization can help with this, with the match, and promote that loan. The second piece of it is we're really trying to inversely match financial exclusion with you know, a lower amount. The more financially excluded the borrower is, a lower amount of people in private fundraising. So that amount would be determined as we sort of review or underwrite the loan. But we've progressed in that area of trying to make sure that those borrowers actually have to bring less people from their own community. The second thing that I didn't mention, Kiva, is also in January, or hopefully by early January, we will be having an opt-in credit reporting aspect to our loans. So those entrepreneurs who would like to report on credit will be able to do so early in the year. And that for us is also huge, because it's really important as entrepreneurs climb up the capital ladder so that they can use this as a real way to prove their credit worthiness.
Hey, can I jump in real quick? I know we're out of time, but whoever asked that question hit it right on the head, because that can be a barrier. That initial private fundraising part can be a barrier to going to the crowd or to the open public. And I think if Kiva would consider a workaround with Native CDFIs to find a more creative way to get by that private investment. For example, maybe the Native CDFI has creative funds that can satisfy that immediately. But it's just a thought, and I'll be quiet.
Gary, I love the ideas, and you know, I would say that I'm excited to say that I would love to share that idea. Mayor Schaaf in Oakland has a similar idea of having a specific group come in and do that initial support. So it's not an idea we haven't heard, and it's an idea that's kind of up for consideration right now. But I'll pass that on. That really that could be something of interest to make this more feasible.
Great.
Stephanie, thank you.
Yeah, thank you so much for presenting, Anne and Betsy, and your information's in the chat for anyone interested. We are at 2:01 Mountain Time, so I know that's the conclusion of the webinar. If anyone has any additional questions or concerns, please reach out to myself. I'll email in the oh, I do see one more question, but I'll email out the contact information for Kiva as well as the PowerPoint slides, and feel free to keep in touch. And that final question there is, would a tribal revolving loan program be able to provide the match and become a trustee to help build Native credit?
Are you, that's Henry.
Yes. Devin?
Devin, so you're saying, would the tribal loan funds be able to use to sort of meet the private fundraising match?
Oh, if you wanted to unmute, I can ask you to unmute, Devin. Yes.
Okay. Currently, under our current programs, not necessarily, unless they were also a lender. But I think that the way that Gary was proposing was if we could adapt a system where where a trustee was able to sort of put all of the funding in to support those. Generally speaking, the way it works under our program currently is that they need a specific number of people, not a dollar amount. So if they needed 5 people, for example, some of the employees of the tribal revolving loan fund could lend $25 each. The loan program itself, it's by individual currently, but that's something that I will pass along and we could take into consideration.
And just to clarify, the need for the private funding, or the request for the private funding, is that Kiva doesn't ask for collateral, good credit scores, etc. Instead, by asking for that private fundraising time where you have 5 to 25 people, depending on the ins and outs of the loan, offer that essentially social support. It helps provide a sense of positivity that the entrepreneur's business will be supported by the community. That's why we have the private loan amounts. It's our way of getting some social capital versus actual capital.
Yeah, and that's a good point, Betsy. And the way we view that has been more of kind of an extension of our underwriting. It's really around the concept, the general concept. If your friends and family and your community support you, then so should Kiva lenders. And that's where that piece really comes from, although we've been working to sort of refine it. But just so you understand, it's really, as Betsy put it, it's really that piece of having your community support you. And since it's a loan, not a gift, we also feel that experience that entrepreneurs go through of helping to understand and how to use PayPal, and their family and friends getting that loan back, is also great because they learn a certain skill set with a Kiva loan that really they learn how to use PayPal. They teach their community a little bit about PayPal, who may be their customers, and it generally speaking is a big hurdle, but it's a worthwhile one. When entrepreneurs come out on the other side, generally we hear that they did build skills in the process of getting the Kiva loan as well. So I will take the suggestion back because I love it, and I personally do.
Did that answer your question, Devin? Feel free to use chat. Does anybody else have any other questions out there? I see we still have quite a few participants. Okay.
Not seeing any, I will wrap up the webinar, and thank you so much, Anne and Betsy, again for joining us. It's a wonderful, beautiful opportunity for our Native entrepreneurs and Native CDFIs to work with Kiva. So thank you so much for opening this up to Indian country, and Chi Miigwech. Thank you for everything. And look out for my follow-up email. So, thank you.
Thanks, everyone.
Thank you.